U.S. stocks closed lower on Friday as Middle East tensions once again took control of the market narrative. Rising fears over the economic fallout from a wider regional conflict pushed oil prices higher and weighed on risk assets throughout the session. Rising fears over the economic fallout from a wider regional conflict pushed oil prices higher and weighed on risk assets throughout the session. But the possibility that this conflict could last longer spread further and create a new inflation problem just as growth begins to cool. Now entering its third week, the Iran conflict is no longer being treated like a short-lived geopolitical shock. Earlier hopes that President Trump's originally suggested four-week endgame could still materialize began to fade during regular trading hours. Reports that the Pentagon was preparing for possible ground force options in Iran, along with headlines that Washington was reviewing scenarios involving Iran's Karg Island, added to market anxiety. Trump also maintained a hard line, saying talks were possible, but a ceasefire was not his goal. That combination hit the market at the most sensitive point: energy, inflation, and Federal Reserve policy. If oil keeps rising, inflation may reaccelerate. And if inflation stays sticky while growth slows, the Fed's job becomes even harder. Fed Governor Christopher Waller signaled that weaker labor market data could still support rate cuts later this year, while Michelle Bowman said she continues to back 3 cuts in 2026, though she is watching the war closely. In simple terms, the Fed now looks trapped between slowing growth and renewed inflation pressure. Trading volume was also amplified by a massive options expiration. Roughly $5.7 trillion in stock, index, and ETF-linked options expired on Friday, increasing volatility across the board. On the single stock side, Supermicro Computer was one of the day's biggest losers, plunging 33%, after current and former employees were indicted over allegations tied to illegal AI server shipments into China. But then came the late-day twist. After the market closed, sentiment shifted sharply. Trump said on social media that the U.S. was getting very close to achieving its military objectives against Iran, and that officials were considering how to wind down operations. That helped ease some of the most extreme fear, but it did not remove the deeper market concern. Jose Torres of Interactive Brokers said investors initially believed the Iran war would end quickly, but with no clear sign of resolution and clashes intensifying, uncertainty has only grown. Julia Herman of New York Life said the Fed is caught between slowing growth and renewed inflation pressure. Barclays added that markets have already started pricing in the possibility of prolonged high oil prices. So the real takeaway from today is this: the market is no longer reacting to war as a temporary headline shock. It is beginning to price war as a macroeconomic force. If oil stays higher for longer, inflation expectations rise. If inflation rises, the Fed has less room to cut. And if the Fed has less room to support the economy, stocks lose one of their biggest cushions. Friday's sell-off was not just about fear. It was about the market starting to calculate the real economic cost of a conflict that may last longer than investors expected. If this recap helped, please like and subscribe for more market updates.